Okay, let's get some legal perspective on that as well. Akhil Irani joins in with his take on where things stand right now. So Akhil, first on this prickly issue on whether or not ABG Shipyard can withdraw their open offer, what according to you do the SEBI regulations lay down?
Regulation 27 of the Takeover Code primarily says that a public offer once made cannot be withdrawn except if you get regulatory approval or if the individual is the offerer, the individual dies. Now, in this case, the issue turns on what interpretation you give to the language once made, and considering the fact that the open offer was going to commence tomorrow, can it be said that this offer has been made? Now, if I look at it from a purely legal/logical standpoint, it's tough to say that an offer is made unless it opens. And so, as on date, if ABG is saying that, well, we're exiting and we're not making the offer, there is no real regulation that deals with this particular time window of withdrawal.
Akhil, that's an interesting point, but let me ask you a bit more on that, because an open offer has been announced, and once it is announced, I imagine that shareholders of Great Offshore might have accumulated shares on the premise of that announced open offer, which might not have opened in fact. Is that not reason enough for the offer to be deemed as having been made? Because you've announced it, on the back of which shareholders might have taken action.
It's a mixed bag on this one, Zayan. There is really no law on this. I think we'll be breaking ground here, and I'm sure there is going to be some litigation ahead, either from the regulator or from the counterparty. So I mean, there is a difference to be made. But if you take pure contract law, making a public announcement is giving an intention, but you're not actually calling anybody to tender shares. I mean, the share tendering can only start on the 3rd, which is tomorrow. So I think it's going to be a very subtle line, and it's tough to put a finger on it. I think, a lot of research will have to be done as to what is the logical interpretation that one can adduce to this scenario.
Fair enough. I also want to ask you on a corollary point. I mean, this always looked like a case where this is a two-horse race for an asset, and ABG Shipyard being part of this race, having made an open offer which has not opened yet, is it within the spirit and the letter of the law to sell its existing 8% stake down in the market when an open offer is standing in the market, though it's not open, but when an open offer announcement has been made? Is it violation of either the spirit or the letter of the law in that in how shareholders of Great Offshore would have been guided?
No, I mean, surely I think one can always allege bad faith, because there could be different perspectives at play here. They could have come in as a competitor to jack up the prices from day one. They have gone to the regulator and sought permission to do an open offer voluntarily without having triggered the takeover regulations. So obviously there have been a number of affirmative steps that they've taken, and to then renege on those steps, is effectively not acting in good faith. Now, although there is no clear law, the law can be interpreted one way or the other. I mean, there could be a cause of action for SEBI to, suo moto proceed, for, securities law violations and violations of the SEBI Act. And also there could be, actions that could be taken by Bharti because, for, a breach of or bad faith behavior and losses caused to it by virtue of this competitive bid, which was never intended to be followed through, if a case like that could be made out.
Sure.
So, again, we haven't really seen any of this in the last 12 years of the takeover regulations. And, effectively we will be creating history of sorts, on the legal side, depending on how this pans out.
Akhil, there's also a difference in the in the open offers in terms of sections. I mean, ABG's offer was actually an offer for control, whereas Bharti's was an offer for majority stake. In that, is it within SEBI's mandate to take some kind of legal action against a company that actually put out an open offer for control, not just for majority stake?
The way I see it is eventually an open offer is an open offer, regardless of the provision under which it has been approved. And so although the management section or regulation 12 open offer was not accepted by SEBI, but they nevertheless gave them permission under the other regulation. So I don't think that, much would turn on that. I mean, because the fact is that they were allowed to make the open offer and try and garner as many shares as they could. If they would have garnered enough shares, then perhaps they could have even got their directors on the board. So that regulation 12 would probably not be so relevant anyways, and the lack of approval under that regulation. So I don't think much will turn on that.
Yeah, just one quick clarification, Akhil. Now, what happens tomorrow? Because that's the official opening date for the open offer. Will SEBI have to act or put out some kind of reaction within now and tomorrow morning when the market opens, or can they hold on and study this in detail?
No, in my opinion, SEBI should probably move quickly and seek some sort of clarification. That is presuming that ABG has not approached SEBI already and sought some sort of an exemption. So, subject to those facts, in my opinion, SEBI should move because, this completely changes and undermines, SEBI's approval altogether. So I think the faster they move, the better it is, and to get clarity to the shareholders and the market at large.
Akhil, just one other technical clarification. In a two-horse open offer race, once one of the parties makes a significant acquisition of shares from the marketplace, that becomes the revised open offer price automatically. Now, in this case, ABG has an open offer open at 520 and it's sold shares, not purchased, but sold shares at 570. Does that have any bearing on its on its offer price of 520? Does that have to be revised at all?
Yeah, it should be. I mean, because obviously they've, gone up on the offer price. So yeah, technically it should be.
But they have not bought, they've sold. Does that also trigger off a revision of the open offer?
Yeah, I guess, apart from the law here, if they really want their open offer to be a success or would have wanted their open offer to be a success, then they would have to revise, because if the other side was offering a higher price, then, why would a shareholder tender at the 520 if they were going to get a higher price? So I think, without getting into the pure legalities of it from a practical perspective, they would probably have to.
No, the practicalities I suspect are somewhat different because there's a little bit of acceptance math involved here. But thanks, Akhil, very much for your initial thoughts on this matter. It's a complex matter and history will break. As you heard the lawyer saying, there's no precedent to this. So I think some of the tenets of the takeover law code, etc., will be tested by this event and how it turns out.